Welcome to Drill Down Earnings. We have quarterly results from Super Micro. Well, we don't really have quarterly results from Super Micro. I'll explain. This is the business story behind one stock on the move. And stocks moving. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research, where we look at the 50 most important companies in technology. And we certainly look at Super Micro as such an important player in developing the systems that go into data centers, particularly those focused on AI, particularly those with NVIDIA chips on them. But we don't really know what's up with Super Micro, even after they announce earnings. How is that? Well, first, let's talk about what's going on with this company. This company came out a few months ago, 6 months ago or so, and said that their prior results could not be relied upon, that their auditor had quit, accusing the company of essentially making it difficult to complete an audit, and they just flat out quit. The company is looking for a new CFO. The acting CFO is still there. They established a committee to look at all the problems within the company, but then it came out later the committee was just one person, and the one-person committee of a board member, an insider, said, yeah, there's no problems here. We just got to change a lot of things and get an entirely new financial management system with a new CFO and a new head of accounting, and we'll tell you more details about this. But when we look at what this company is, we don't really know what the numbers are. So they didn't give us fourth quarter or calendar fourth quarter, so their second quarter numbers, the December quarter numbers. They gave us estimates of what the quarter was because they're not quite sure. So they told us that they're looking at year-over-year growth of 54% in revenues and 5% in earnings. They told us that the revenues were about $5.65 billion. We don't know what the actual numbers are. They literally gave us a range, 5.6 to 5.7, because what's $100 billion between friends? Gross profit margins, they told us that they're worse, down below 11.9%, between 11.8 and 11.9. So let's just take the midpoint here. The midpoint shows us that revenue growth was only 54%, but that's lower than it was last quarter. Indeed, it's the worst quarter of growth the company has seen since, September of 2023. Again, if we're going to believe these numbers. They told us about their expectations of sales next quarter in the range of 5 to 6 billion. That'd be in the third quarter. It's $1 billion range. What's $1 billion between friends? My goodness, really? And they told us about earnings per share. Guess I don't know what to make of these numbers because they're giving us estimates. So they also gave us some revenue guidance for the year, saying that in 2025 revenues would be about $28 billion, or it had been $28 billion. Now it's going to be about $24.25 billion in a midpoint. So they're showing a slower growth in the top line, worse margins, worse gross margins. Gross margins have collapsed. They were nearly 20% in the December 22 quarter. December 24, they're saying they're probably, maybe, we don't know. I did it in blue for those of you watching on Spotify or on YouTube. The maybe 12%. They didn't put this in a press release. But if you listen to the conference call, they actually lowered their gross margins from last quarter because they said that they forgot to include 45 million in revenues. That made revenues go up, and they're 46 million in revenues. And they forgot somehow to include 95 million in costs, which brought down the gross margin. So gross margins getting worse, revenue growth dramatically slowing. Nonetheless, they said in 2026, they're going to put up some fantastic revenue numbers. And if you want to believe them, look, maybe that's why the stock is up in after hours trading, because it was up 8%. Indeed, before we had these results, the stock started rising over the course of the last week. The stock's up 41% in the last week without any news out, another 8% now. Who knows what people were anticipating in this report, but maybe they got it. Still, for the year coming into this print, the stock was down 58%. You wouldn't expect that from a company that's right in the heart of the hottest market in the world, which is building data center systems for AI. They also put out a separate press release, separate SEC filing during the earnings release. I don't know how many people were paying attention to this, that they still can't create a 10Q. They still can't create a 10K. They still don't have reliable financials. They say they're going to have them by the end of February, and maybe that's the good news. They had the stock up. They like to point to their special committee, which we know is one person that works for the company and on the board of directors, or is on the board of directors, doesn't work for the company, but is a board member. Yeah, the special committee said there's no fraud at the company. Okay, why not believe that person? I'm sure she's telling the truth. But when asked about what's going on here and why the results, the gross margins are getting worse and why the near-term guidance is so much lower founder and CEO Charles Liang, who was very central in a lot of the accusations about the company, including some related party, tens of millions of dollars of related party transactions that the company admits to with family members of the Liang family. But he actually says that getting new chips from NVIDIA slowed down revenue growth, as did the problems with the 10K, as if they weren't problems of their own making, but the problems with the 10K being a distraction was a problem for them in terms of sales, I guess, or gross margins, I guess. You listen to what he had to say.
Probably the biggest factor was just the delay in new technology, because when you think about it, we were all set to go, but we were all set to ship, with liquid cooling. We were ready. And, but the problem was that not everything else was. So that was certainly a huge impact. I think, obviously 10K delay was a distraction, but it's more about technology for us because we count on being early to market. And so, that's what creates the big jumps that we have, the kind that took place last year from Q3 to Q4 when we went up 1.5 billion in one quarter. But, remember, we finished the 4 quarters that ended June 30th at 15 billion. And now here we are 2 quarters later, and now we're at a trailing 4 quarters of over 20 billion. So, we have the dynamic to accelerate really well when the technology is there that customers want. And I think if you look at all of the spending predictions and intentions that are out there, you can see the money being put in place to spend money on data centers and on data center solutions, and that's why we're here.
All right, that's why they're there, to build data centers. Why not believe them? All right, here's your big drill down earnings takeaway, the one number that tells us a whole lot. So Q4 earnings from Super Micro aren't earnings at all. It's an estimate because the company can't file its results. So they estimated a range of $100 million, somewhere between $5.6 and $5.7 billion in the quarter. They estimated gross profits margins of 11.8 to 11.9%. But either way, it shows dramatically slowing growth. The stock was up in after-hours trading, but is down a lot in the last year, 58% in the last year. And maybe the big number isn't the new prediction on only 51% revenue growth in the coming quarter, in the quarter that ends in March, but maybe our one number, the drill down bite, the one number that tells us a whole lot, is zero. Ungats. Nada. Nothing. Because there's no 10Q, there's no 10K, there's no new CFO, there's no reliable financials yet from Super Micro. So take that for what it's worth. Thanks for listening to Drill Down Earnings. I'm Cory Johnson.